You found true love. Hooray! Perhaps you're planning to move in together or already have. Just one question though. Have you discussed the M word yet? Yeah, we're talking about money. A recent survey revealed that money accounted for 22% of divorces in North America. This video presents budgeting tips for couples that will end the money issues with this. While budgeting together may not be romantic, it's an essential exercise that a couple could find surprisingly intimate and rewarding. Setting goals and working toward them together gives partners security and puts them on the right track to achieving individual and collective goals. Even if it isn't fun, there are ways to make budgeting more effective and less intimidating. Later in this video, we will tell you about the 50-30-20 rule, a simple and effective monthly budgeting method that tells you how to apportion your income. The rule is based on the book All You're Worth, the ultimate lifetime money plan, written in 2005 by U.S. Senator Elizabeth Warren and her daughter, Amelia Warren Tyagi. The first and most crucial step in creating a budget with your partner is to determine your financial goals. You're more likely to succeed if you keep your plan realistic. Getting on the same page is critical for coping with the stress that comes with making financial decisions. Moreover, knowing that you both want similar things makes it easier to save together. It also ensures you're financially and emotionally invested in your relationship's success. Some objectives that could help shape a couple's joint budget include paying off a debt loan, traveling together, or perhaps a wedding. Other objectives may include purchasing a home, creating an emergency fund, saving for retirement or family planning. You might want to consult a financial planner to help you meet these financial targets. According to Tiffany Elish, a personal finance expert and founder of The Budgetista, creating a simple and realistic budget is not difficult. Alice says, "I love budgets because I look at a budget as a say-yes plan." Whatever it is that you're wanting, you can go to your budget and figure out how your budget can give you that thing. It's crucial to note that your net income is the foundation of an adequate budget. You must identify all sources of income, including wages and salaries, bonuses, gifts, and tax credits. You can then begin tinkering with your plans for achieving your goals. It's time to consider everything you spend money on, individually and as a couple. Some expenses are recurring, while others are one-time. Concentrate on getting everything down on paper or in a simple spreadsheet. First, record your personal expenses separately, such as transportation, meals, and shopping. For variable expenses, such as restaurants, make a rough estimate subject to change. Then proceed to the shared expenses. Most couples have individual and joint assets, financial obligations, and regular and irregular expenses. Ensure budget items comprehensively captures all these. It's advisable to keep separate columns for individual and joint expenses. We'll later explain why this could be beneficial and how to execute it. The most challenging aspect of couple budgeting is determining how to share your expenses. Though it may be a difficult conversation, it doesn't have to be toxic if you're both honest about your goals and sources of income. Decide what portion of each expense you are prepared to bear. For example, your partner may cover the family phone bill while you get the water bill. If you can accurately distinguish your needs from your wants, you could apply the 50-30-20 rule. The basic rule of thumb is to divide your monthly after-tax income into 3 spending categories: 50% for needs, 30% for wants, and 20% for savings or debt repayment. In splitting the bill, consider income disparity. You may also assess who benefits more from an expense and ask them to cover it entirely or pay a significant portion. It is fair to pay 70% of that Netflix subscription if you chill the most. After dividing your expenses, you need to figure out what budget constraints work best for each person. Being realistic is essential unless you want to constantly disappoint yourself or rely on your credit cards when unexpected expenses arise. Setting limits is an integral part of eliminating wasteful spending. For example, when you audit that $800 monthly grocery bill, you might realize that you waste too much food or identify that you spend unnecessarily on snacks. Discuss your expected savings and expenses and decide how much to spend on specific goals. Your joint budget will help you move funds from one expense category to savings for a large project. Examine your spending habits and change one or two small things at a time. If your partner prefers going to work in an Uber and you eat out for $15 at lunchtime every day, you could start a Thrift Thursday where they board public transportation while you bring lunch from home. Subscribe to this channel for content that will boost your financial knowledge and advance your financial goals. A joint mutual account is one of the most straightforward budgeting tools any couple could have. Dedicate a column in your spreadsheet to each partner where you assign them their share of an expense. Also, compute the total. This will show you how much money each person should put into the joint account each month. If you don't want to run certain expenses through a joint account, make sure to exclude them so you can arrive at a fair division. Each partner can deposit their funds into the joint account. This way, you gain control over your individual account, while your shared expenses are handled in the joint account.
Yeah, that should work out.
Both parties must work together to maintain and manage the budget by recording expenses regularly, either through a shared spreadsheet or an automated report from your joint account. You could use budgeting apps, a cloud-based spreadsheet like Google Sheets, or review bank statements. Using budgeting apps or Google Sheets necessitates entering expenses as soon as possible to avoid inaccuracies and missing expenses.
Oops.
When your spending is about to exceed the limits you set, you'll need to put a plan in place. Hence, keeping each other in the loop makes it much easier to figure out what needs to change. It is critical that both parties feel involved in the process of developing a joint financial plan. Ignoring these details can lead to significant frustration if your partner feels left out. When budgeting as a couple, it's necessary to stick to set goals, spend within budget, contribute your agreed portion of earned income, and hold each other accountable. It may not feel sexy, but it is in some ways romantic after all. Is love not about pursuing your dreams together? If you are preparing to get married or plan to do so, we recommend you watch our video, Financial Planning Before Marriage. It could help you avoid common financial issues couples face. Thanks for watching.